Well, howdy there, folks. Welcome into today's video. 7 stocks to speak about in this one here today. Palantir. We got to talk about Palantir. CFO just sold multi-million dollars worth of the stock. We're going to talk about, is a crash imminent? The stock's had a tremendous year this year. Have we stolen all the gains from next year? We're going to speak about that one in this video. Tesla, some big news in regards to Tesla on several different fronts. We'll speak about that in this video here today. Meta, got some important subjects to speak about in regards to that one. Sofi, a lot of people want to know what's my conclusion with Sofi. Am I going to start buying Sofi stock here in the next few months or not? So I want to share that in this video as well. PayPal, definitely got a lot to share in regards to PayPal. So PayPal, I put out my price projection here today. I expect PayPal to be $150 plus in 3 years. So we're going to go through in this video later on exactly how I get there, why I think it's going to be $150 plus in 3 years. Amazon, several different things to speak about in regards to Amazon, and then Alibaba. Something shocking. I haven't spoke about Alibaba stock in probably, honestly, years on the channel. We're going to speak about Alibaba today, and I have a pretty shocking prediction to make in this one, okay? Appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed to the video. For the people that are seeing this video in the first few hours that it is out, that means our Black Friday deal is still going on. It ends at midnight tonight. Midnight tonight, the Black Friday sale ends. Usually the $125 tier is $62 today and today only, okay? You get access to my Become a Master Stock Market course, which is a $997 course usually as a standalone product. It's my #1 course ever. You get the ability to see the moves I'm making in the market, and you get to see exactly how I diversify my portfolio around, plus be part of that Discord chat. Yeah, you need that, okay? And when you go through the course curriculum, these are the most important videos, okay? To most people, all the videos are going to be important, but these are the ones that I know almost every single person watching this video right now, you need these videos, okay? How I value a growth stock, how I value a growth stock part 2, how I find the next great growth stock, how I value based on growth. All these sorts of videos go into if you're getting ripped off or if you're getting a great deal on a stock. And what I've seen continuously over the years is people might be able to understand income statements, balance sheets, or like, I like this company, I think its product's going to do well in the future, those sorts of things. Where people get tripped up is they don't know if they're buying a stock for an undervalued valuation or overvalued valuation. If you're getting ripped off or you're getting a steal deal on a stock. Those are the super important videos. Those are worth way more than the price of admission. Let's just put it that way. So yeah, enjoy that course, folks. Enjoy that deal. Anybody that's seeing this tomorrow or beyond, the deal's already over. Maybe next year at this time, you'll get another chance for a deal like that, okay? All right, guys, let's start getting into this. All right, Palantir. Palantir. By the way, the deal is pinned comment down there. Palantir stock. Okay, so Palantir, obviously it's had a tremendous year. We're up 117% now in the stock. In the public count of $57,000, the stock has been doing very well overall. I've bought this stock. I've bought shares as low as $7.18. I've paid as much as $16.50 for shares. This kind of shows my conviction in the stock in general and the company in general that I've bought shares anywhere between $7 and $16.50, just to be quite honest. It basically shows that if the stock's $15, $16, I still think it's a good deal even at those sorts of prices. If I didn't think it was a good deal, I wouldn't be buying. $9.52, I wouldn't have been buying at $9.52 unless I thought it was a good deal, right? So I just think that's important. Now, we have stolen some level of gains from the future. If you're wondering how Palantir stock's going to do in 2024 and beyond, there's no doubt, right? The stock's up 199% year to date. No, that does not mean we've stolen all the gains from the future. That's an important thing to remember. Great companies go on great runs over time, right? And sometimes these great companies can have great year after great year after great year, not just in regards to their business fundamentals, but also in regards to their stock price, okay? But there's no doubt when you go up 200% in a year, you've stolen some level of gains from the future. No different than if the S&P 500 was to go 30% tomorrow. Well, we've stolen a lot of gains in the S&P 500 from the future, right? No, in regards to Palantir, here's the deal, okay? This stock can still be an animal in 2024, but we need a situation to transpire here, okay? Analysts actually don't have the craziest expectations for Palantir to come through with next year. 19.5% revenue growth expected, less than 19% EPS growth, which is not very good. We need an NVIDIA type moment. I'm not talking about as crazy as an NVIDIA type moment, but if we get a moment where, let's just call it, this year wasn't supposed to be that exciting of a year for NVIDIA. You go back to this time last year, most analysts were not expecting some sort of super exciting year for NVIDIA. And obviously the AI hardware wave came and, the rest is history, right? Now, in regards to Palantir, most people aren't expecting like that big of a pickup in business. I mean, this is, 2023 is not even a big AI year really for Palantir. It's for the chip side and the hardware side, but not really for the software side. That's really coming in 2024 and beyond, right? And so this year, 16% revenue growth expected, but then only up to 19%. That's not a big boost up. If we have some sort of game-changing moment here where the revenue growth rates and the EPS growth rates are far exceeding where analysts are at, then we could be in a situation where Palantir goes on another beast run 2024 as well, okay? And next thing you know, it's a $30, $35, $40 stock. That is certainly possible, but we got to come through with the numbers. Now, if we just come through with these sleepy numbers analysts have, I don't think Palantir will have a big year in 2024. We've got to come in, knock the cover off the ball. We come in and do that. We'll have another beast year in 2024. Is it going to be 200% up? I don't know about that. But could we have another 50 to a 75% gain? Sure. If we come in and crush these numbers, absolutely. Okay. Now, with that being said, some executives sold some shares here, including the CFO sold multi-million dollars worth of stock. Now, something very important is right down here. Okay. It's really small text, so I do apologize. This transaction represents an automatic sale of shares to cover required tax withholding obligations in connection with the vesting and restricted stock units. All sales were conducted in compliance with the reporting person's rule, okay, of the trading plan. So, when it comes to these sorts of sales, like this sale probably would have went through this week if the stock was at $9, $7. So when you see sales like this and these automatic sales, like you could think like, oh, that must mean the CFO thinks the numbers are going to be bad, or, they must be doing something bad at the company, or maybe they think it's overvalued. Like these guys sell shares at all different sorts of prices. Whether the stock was $19, $9, or $900, those shares could have probably been sold. And so that's just something that food for thought in regards to the situation. People always think it's the end of the world. It's over for us. It doesn't work like that at all. And if you look at great tech companies, or any great company for that matter, okay, any of the companies you respect, that have done tremendous over the last 10 years, okay, the Amazons and the Googles and the Microsofts and the Apples, and go through all those companies. Look at the last 10 years. Tell me what you find. Massive amounts of shares sold by executives. Year after year after year after year. Now, every single one of those was a bad financial decision. Every single damn one of them, just to be quite frank. But yet they did it. And so to run to conclusions that, okay, this means the end of the world, it doesn't work like that, okay? Microsoft executives sell pretty much every single year. And Microsoft stock just hit a new all-time high. So it is what it is. That's just... it's part of the process, right? And that's a big part of their compensation. A lot of these executives, a lot of times these executives make way more in options, in shares that basically vest for them, than they make in their salaries. And a lot of times it's substantially more. I mean, I've seen it be like 10x, if not more than 10x. Like in terms of what their base pay is versus what they get in share compensation, it's like a night and day difference, okay? So that's that in regards to Palantir, okay? Next up here, Tesla. Several different big things in regards to Tesla, okay? First thing I thought was just worth mentioning is now we have marked 3 years of nowhere for Tesla in terms of stock price. Now, look at Tesla's business model in the last 3 years and like, wow, look at how much they've scaled. Look at how many vehicles they're selling now. Look at their revenues. Look at how big of a presence they have nowadays versus 3 years ago, right? And that's all true, but the stock price actually hasn't gone anywhere for 3 years, folks. 3 years. That's tremendous to think about. But remember, prior to me getting in the stock didn't go anywhere for 5 years. Then I got in, and the timing was pretty good, and, the next year, the stock started to beast. But I can just tell you, Tesla goes through these sorts of big, huge runs, then does nothing, then a big, huge run, then does nothing. So that's something, food for thought there, okay? No, Elon Musk calls Swedish Tesla strikes insane as impact spreads. This is something I called out for you guys that was going to be an issue. I called this out, probably 2 or 3 weeks ago. That this was going to be an issue. It is an issue. It's something that's going on. We're at the tail ends of inflation right now. And when you're at the end of an inflationary cycle, you just see massive pressure from unions, massive pressure from workers to up pay. It's almost happens at the end of every single inflationary cycle, because basically what happens is the cost of everything, of life, of living, goes up substantially, right? At first, people don't make adjustments, or companies don't make real big adjustments. And then toward the end of that cycle of inflation, you have all the workers of the world calling for more wages, more wages, more wages, right? And so that's what's going on here in regards to this Tesla situation. They're not immune to it. They're just one of many companies that are all facing these sorts of pressures right now. And these pressures are going to remain for, I think probably the next quarter or two. And then you're going to see all these sorts of pressures alleviate in a massive, massive way. And the reason being is inflation is now starting to alleviate in a massive, massive way, and will continue to throughout 2024. And so by this time next year, I don't even think you'll see any of this sorts of stuff anymore at that point in time. Okay. Now, Tesla's doing more discounts. Tesla has new deals on its Model Y. Investors might not love that. Tesla's U.S. website now shows discounts for as much as $3,000 on some Model Y EVs in inventory. A long-range Model Y list for $56,000 now can be purchased for $53,000, right? And it goes back into the discounts and the discounts and discounts. So you know what I said? I said, let me go to Tesla's. I have my Model X, I have my Model S Plaid. I'm not in the market for a Tesla right now. I'll get the Cybertruck whenever that's available for me. But I'm not in the market for a Tesla. But I said, I just want to go and I just want to see what the deals are. Let's see what Elon Musk is doing for some Black Friday deals out there on some Teslas, okay, in Vegas specifically. I found some interesting things. I found a Model 3 Performance, 1,800 miles on the odometer, before tax credits, before gas savings, $50,000. That's pretty wild. Remember the $7,500 tax credit. Obviously, you save on maintenance, you save on gas. So this is before that number. I was like, what? For the red, 0 to 60, 3.1 seconds, autopilot, 20-inch wheels. I was like, wow. But that wasn't the best part. I found something better, okay? I found this baby. This looks like a brand new, real deal Holyfield. $37,000. Now that's before the $7,500 tax credit. That's before your gas savings, your maintenance savings, all those sorts of things. 0 to 65.8 seconds, 140 mile per hour top speed, 272 miles of range, autopilot, 18-inch wheels. I'm like, what? Listen to this, $26,690 after probable savings. And you're getting the best affordable car in the world. And not just by a little bit, but by a lot. As somebody that used to own a Model 3 back in the day, I bought my first Model 3. What year was that? I think it was 2019, I want to say. 2019. I had a Model 3 Performance. It's the best affordable car by a mile. And it is nothing even remotely close to that car. And the fact that you can get that car at that sort of price is insane. It's literally insane. I actually texted those photos over to a friend. Friend said, is that real? They didn't even believe it. They didn't even believe that was real screenshots or that was real numbers there. They thought maybe I made it up or something. I'm like, no, that's dead serious. You can get that right now for that sort of price. Crazy. I think Tesla's cut price way too much here in the situation, my personal opinion, but that's just my opinion, okay? I don't obviously run the company, but it is what it is. All I know is I secretly wish I was in the market for a Tesla right now because I'm just looking, I'm like, damn, man. That's where the real best, other than my deal, my real deal Holyfield for $62, other than my deal, this is the second best Black Friday deal on the market here today. I'm like, wow, what a smoking deal that is, okay? Now, margins for Tesla, in my opinion, are going to bottom in the next couple quarters. We'll probably bottom margins somewhere between first quarter and second quarter of 2024, and then margins will start to improve probably around the third quarter into the fourth quarter, and then I think margins can improve for several years after that for Tesla. But we're in a bad margin situation here for Tesla in the short term, and it is what it is, right? But we're taking market share, and we're taking market share. We're going to keep taking market share, and we got services and software and things like that we can sell on top of that down the road to these, obviously, customers that are buying Teslas, and they're going to love the product, and they're going to tell more friends and family members, and more friends and family members in 2024, 2025, 2026 are going to be buying Cybertrucks and Model 3s and Model Ys because they heard great things, so that's all that, okay? Alrighty, next one up here, Meta. But a few things I want to talk about in regards to Meta, okay? So stock's done tremendous this year. Obviously, huge comeback. We're now up $392,000 on the stock. I think Meta we can maybe get a little over 400 by the end of this year. Okay, unless we have a big sell-off in December, Santa doesn't come, something like that. Okay. Now, first thing is Meta's still way undervalued. Regardless of the move and oh wow, we're up 176%. It's all irrelevant. The bottom line is the stock overvalued or undervalued. It's extremely undervalued. We're trading at 19 times 2024 estimates. Keep in mind, analysts have been wrong now, several quarters in a row. They're going to be wrong for their numbers next year. Meta's going to do better numbers than anybody's anticipating. The stock's significantly undervalued right now. And by the way, Meta should be a stock that's trading at around a 30 forward P or so, based upon how great the business model is, how sticky it is, and being like the fact that it's the number one place. Like if you're going to advertise, you've got to go to their platforms. Like 30 times is very fair for this company. So the stock is significantly undervalued, okay? Another thing I think is interesting that I've seen kind of with my kids, right? We have a PS5 in the house, we have a Nintendo Switch, and then we have the new Oculus 3. Something fascinating I've seen with kids is it seems like more and more they're asking if they can play with the Oculus rather than with the PS5 or with the Switch. And I think that's very telling on kind of the product that Meta's putting out there for like the younger generation as far as just on the video game system side. And like what, do kids think is more fun as like a video game, right? And I'm talking about like obviously the younger generation. And so this leads into what I've spoken about in regards to Apple versus Meta in kind of their headsets. And I think Apple has a PP problem. I think Apple has a real PP problem. Price and plugged in. Price and plugged in, okay? By having to have the device plugged in, it is a way worse experience. Meta has it where you're free. You're free. You literally just have the device in your head and your controllers in your hand, and that's that. You don't have to worry about tripping over wires or there's wire hanging down on your shoulder. None of that crap. Like, I'm shocked that Apple thinks it's okay to ship a product in 2024 that has a wire attached to it. That's mind-blowing to me. I'm like, how far backwards are you guys at? I wouldn't even ship a product. Like, literally, I don't even think Apple should have shown off the product. Like, if you got to ship a product that is VR and AR in 2024 with a wire still attached to it for like that's crazy to me. Like, no. That's laughable, okay? And then the price point's ridiculous. It's such an unrealistic price point. No one's going to, I don't say no one's going to buy it. Of course, everybody's, some people are going to buy it. But I'm just like, with the Quest 3 being a $500 under price point, and this being, after tax, close to $4,000, it's just, you're not going to get these kids playing it. Bottom line, because their parents can't afford. I mean, if people can't freaking afford to buy Model 3s and Model Ys, you think they're going to go out there and spend $4,000 on a headset that has to have a wire attached to it? Give me a break. Apple's messed up bad. I don't even think they've realized how bad they've messed up and how bad they're going to lose this battle. But I'm just watching it all play out. And I'm looking at both sides, and I'm like, damn, man. Like, Apple really messed up here. Apple used to be the company like, we're going to come in with the price points that attract the youth, which is under $1,000 price points. And maybe someday they have a device headset that's under $1,000, but the problem is that's so many years away now that Meta's already got it by that point. Like, Meta's already gonna have one. Like, you gotta have something under $1,000 price point right now. Meta's gonna win the war. Like, fine with me. That's cool with me. But I'm just like, I think it's funny how like Apple really lost it like that, right? That's compliments of no Johnny Ive. That's compliments of no Steve Jobs at the company anymore. SoFi. Let's speak about SoFi in regards to this one. Okay, SoFi. So, am I going to buy SoFi stock in the next few months? Well, here we go. So, first thing is I've been looking at SoFi and obviously their business model, their Apple, those sorts of things, right? And certainly intriguing. Their growth rates have been very impressive. But there are some issues I'm kind of finding with SoFi that makes me a little hesitant here, okay? So first one is, obviously the company is lost money every single quarter. Now, that is supposed to flip in 2024, which is good news for the company, okay? But up till now, it's just been obviously money losers, which actually ends up putting into a spec category, right? The other problem I'm seeing is the company does miss quite a bit or just barely comes in line, right? Which is almost seen as a miss by Wall Street as well. And this is in regards to their bottom line. Now, the good news is they pretty much beat top line almost quarter in and quarter out. So it's a company you can be very confident in on the top line, but the bottom line you just can't be confident in. So that kind of is like, oh boy, that's a little bit of a trouble spot here, right? Next thing, I'm still kind of in the understanding phase. I'm trying to figure out, like, are these numbers accurate or not? Because analysts have a massive deceleration of revenue growth happening next year and into 2025. And I'm trying to figure out, like, is that going to be a probable situation or not? And then we got this weird phenomenon where the company's going to turn to profitability likely in 2024. That's what analysts are expecting, most investors are expecting, right? But then 2025, we're going to get a major a major another move up in terms of profitability. And then that would put the company at only about 31 times 2025 numbers, which actually doesn't seem that low considering the revenue growth for Sofi overall. So I'm still doing some work here and trying to figure out, are these numbers somewhat accurate or not? And I don't have enough confidence yet to say yes, they're accurate or no, they're not accurate, right? Now, the next issue I'm kind of running into with Sofi, let's say I think this is accurate and I think this is accurate. Let's say I find that and I'm like, okay, I think it's actually a decent value and decent buy. The other problem is I'm looking out there and I'm like, okay, there's a finite amount of money to go around, right? So I'm saying, do I put that money in Sofi or do I put that money in PayPal? Or I've even looked at Hood recently, and I think we're kind of at a bottomish phase for retail investors in terms of retail levels of interest in the stock market. I think we're kind of bottoming that out over this next few months, and I actually wouldn't be surprised if Robinhood starts to grow users at some point in 2024, as some people start to slowly trickle back into the stock market in future years, 2024, 2025, 2026. And so I've even looked at Hood recently. I'm like, man, maybe Hood might be interesting. But that's the other trouble is, even if I find Sofi numbers somewhat attractive here to finish out my research, I'm like, am I going to buy PayPal with the money, Sofi or Hood? So that's another thing I got to kind of figure out. So Sofi, I would say I like what I see, but I don't love what I see. And sometimes it's hard, and especially when you're on a market where we got a lot of discounts on a lot of stocks out there, a lot of small caps, dividend stocks, even some tech stocks, where it's like, do I put money in a stock I like versus stocks I love, right? On the fundamental basis, on the income statement, balance sheet basis, on the valuation basis, right? All those sorts of things. So I got a little bit more work to do in regards to Sofi before I could say, okay, I'm going to go ahead and buy shares there, okay? That leads us into PayPal, right? We just spoke about, mentioned PayPal here, money versus Sofi versus PayPal versus other stocks, right? And so in today's video, I reacted to a bunch of different things, and I also gave it my price target up randomly in that video of I think PayPal's going to be $150 plus in 36 months from now, okay? It's very possible it could be that a whole lot sooner, but that's kind of my prediction, right? Now, how do I get there? It's math, okay? So 2026, I have them doing pretty easy earnings per share of $7 based upon the revenue growth rates I have, based upon kind of where the company's growing their EPS right now versus where I think they're going to grow it in a few years from now. Based upon how many shares I think they're going to buy back over the next few years, I think $7 is pretty in the bag for 2026. Now, 2026, I think the company should command an easy PE of about 25. Right now, it's at like an 11. Stupid. It's mind-blowingly doesn't make any sense, okay? When you're growing the growth rates PayPal is and you got the sticky business model you have, you should not be trading at 11 forward P. People will soon realize, probably within the next 12 months, you won't even have to wait 3 years. In the next 12 months, people will realize that was silly. We traded PayPal at an 11 forward P. That was silly, okay? Visa usually trades at 25-ish times, 25 to 30 times. So I think when I look at PayPal's business model between PayPal, Venmo, and Braintree, I think it's just as sticky as Visa. So I think a 25-ish PE is about right for PayPal in 2026. And I think they'll have a lot more respect by then. Obviously, Alex Chris will have been there several years, right? Which, if you run $7 EPS, which is a cake number for them, 25 PE, you're at $175 stock price in 2026, by the way. It's supposed to be 2026, not 2025, right? So $175 stock price in 2025, yeah. That's why I say 150, at this time in 2026, 3 years out, is I'm very confident in that, right? Very confident. Now, by the way, PayPal doesn't even need to go there for me this to be a successful investment. Like, if PayPal even doubled over the next 3 years, which is extra cake in my opinion, which is like 110, I mean, still, like, we made crazy money on that. Crazy money on PayPal shares. That would be like a 6-figure plus gainer for me. But ultimately, I think it's going to 150 plus in the next 36 months. I think the bigger question is it more 150, more like 200 or 250? That's kind of my opinion and perspectives there, right? Never mind, if we're at a lower interest rate environment at that particular time, obviously people are willing to pay a lot more for companies in PE ratios than currently in this market where, people are very, let's just call it, very reluctant to pay up for anything in this market because you can get 5+% in treasuries right now, right? That won't last forever. Alrighty, next one up here, Amazon. Got some things to share in regards to Amazon, and then we'll get to Alibaba and kind of my shocking statement I have in regards to Alibaba, which is going to be very intriguing, okay? So Amazon, now the third biggest position for me in the public count. We're up $41,000 on the stock so far. It's up to a $154,000 position. Obviously, I think the shares are going to do very well over the next few years. So a huge amount of news in regards to several different fronts. So one is, this is top news on CNBC here today. iRobot shares close up 39% on report. Amazon deal set to get EU approval. So this has been something that's been in the works for a long time now. And it looks like it's finally going to get approval. Now, a lot of people are thinking like, the pushback was, oh, Amazon wants to learn your house or your apartment through this technology that iRobot has. And so, boo, Amazon. I don't think that's actually what they want the technology for, my personal opinion. I think they want iRobot for two reasons. I think one, because those Roomba vacuum cleaners are always phenomenal for like sales, for like Prime days, all those sorts of things, right? In the connected home experience that Amazon wants to have. So I think that's one component. The other huge component is I wouldn't be surprised if iRobot has some very interesting technology, because they've been working on robotics for 20 plus years, iRobot, right? They probably have some very interesting technology when it comes to robots that maybe they'll want to either use in last mile delivery or in the warehouses. And maybe iRobot has certain patents that Amazon really needs for their warehouse experience. There's probably several different components. Amazon usually doesn't just do a deal like that for one reason. There's usually several factors that make them say, oh, this is a steal deal. We got to go ahead and make this acquisition. So that's my personal opinion, what's going on there. So good news for Amazon overall. That's been a long time coming in regards to that, okay? Next up here, Amazon's doing this football game, which will probably be about over by the time I post this video, but they're doing this football game on Black Friday, which I think is very interesting. First time ever it's been done, and I wouldn't be surprised if there's going to be a ton of Amazon commercials, Black Friday. I think it's genius. I mean, you know, when I first saw Amazon buy those rights for the Thursday Night Football, I said, what are we doing here, man? Like that just doesn't seem like the best use of the dollar. But when we do deals like this, and we have an exclusive game on a Black Friday that's all Amazon branded, now we're talking. I like that a lot, okay? That's beautiful. No, also, remember, Black Friday, Cyber Monday, all this stuff, who's it benefit more than anybody? Amazon, right? So just always remember that. Like, whenever you see one of these big sale days come up, Black Friday, Cyber Monday, whatever it is, right? Who's benefiting the most? It always ends up benefiting Amazon the most, okay? So, yeah, I love Amazon. Obviously, just an easy stock tone. Alibaba. So, I haven't spoken about Alibaba in a long time. And it's a stock I owned years and years ago. Intel, obviously, I started to notice, like, T-Man, and obviously the other side, like, you know, there was a lot of problems in between China and the U.S., and trade wars started, and tariffs started, and all those sorts of things. So, that turned me off of Alibaba. It made me say that's a no-touch. But things have changed, folks. I now give Alibaba finally the blessing. It's finally a buy again. After years and years and years where this was a no-touch situation, it is finally a buy again. There's no question about Alibaba's financial statements, right? They're phenomenal. The valuation is extremely attractive, all those sorts of things, like steal deal. The reason this was an uninvestable stock for such a long time was the U.S.-China relations were getting worse and worse and worse and worse. And, you know, you don't want to be owning Chinese stocks when the relationship's getting further and further apart. Just recently, the relationship's starting to get closer and closer. So as long as that continues and we don't see any major steps backwards in a relationship, Alibaba is actually an ownable asset that will probably, I wouldn't be surprised, if China and U.S. get closer over the next few years, Alibaba is probably going to do better and better and better over the coming years. And I wouldn't be surprised if the stock performs pretty well over this next few years, right? Now, if a certain political candidate who used to be in office gets in office again, uninvestable. But outside of that scenario, it's actually probably a good stock for the next few years, okay? Appreciate y'all joining me as always. Thanks so much for being here, folks. We are now 11 hours away from the Black Friday sale ending. Pin comment for access to that. Make sure you invest in yourself. And, you know, that course should take you maybe 3 weeks to go through it on a high level. Watch those videos, rewatch those videos again. I'm telling you, it's so dang valuable. It's worth a whole lot more, $62 that you get access to that. Okay. Also, you can cancel your membership at any time. So if you just want to be part of it for 1 month and you just want to, suck up all the course knowledge there and learn everything in that course, then do it. If you want to be part of it long term and continue to see the moves I'm making every single week in the portfolios and how I diversify and be part of the Discord chat, then great. You can stay in there as well. And unless you're in my private stock group or you already have access to Become Master Stock Market, you need access to that, folks. Okay. Pin comment down there. People that are watching tomorrow, sorry you didn't get the sale. Maybe we'll do it next year at this time. But for everybody that's able to take advantage right now, enjoy it. Enjoy it. Much love and have a great day.